Good afternoon, everyone. This is Mark Benza speaking. I'm Vice President of Investor Relations for Honeywell. And welcome to the third quarter installment of our Honeywell Leadership Webcast series. As a reminder, this conference is being recorded, and your microphones have been placed on mute. The purpose of these webcasts is to provide our investors with an opportunity to hear from a wide range of Honeywell leaders on special topics of timely interest. With me here today are Honeywell Safety and Productivity Solutions President and CEO, John Waldron, who will highlight his vision and priorities for the SPS business. And Nigel Coe, Managing Director and Senior Analyst at Wolfe Research, who will lead the discussion on topics that are top of mind for investors. Presentation, including any non-GAAP reconciliations, are available on our website at www.honeywell.com/investor. Please also note that elements of our presentation contain forward-looking statements that are based on our best view of the world and of our businesses as we see them today. Those elements can change based on many factors, including changing economic and business conditions, and we ask that you interpret them in that light. We identify the principal risks and uncertainties that may affect our performance in our annual report on Form 10-K and other SEC filings. John, Nigel, thank you for being here today. Before we dive into Nigel's questions, John, let's take a few minutes up front for you to outline your strategic priorities for the safety and productivity solutions.
Thanks a lot, Mark.
Over to you.
And thanks, Nigel, for being with us today. And I thought maybe before we got into the Q&A, I would just share a couple slides just as a reminder of what we do at Safety and Productivity Solutions and what we've accomplished and where we're going. But before I do that, I want to maybe send a message out to all of the employees out there in Safety and Productivity Solutions who are doing such a terrific job helping us focus on our customers and helping us deliver. This has really been an incredible last 6 or 8 months at SPS, and it's really put a fine edge on what we do for our customers and brought us really close together with a lot of our major customers and even closer together with new customers. And our customers are having kind of the same basic challenges that many of us are. They're thinking a lot about their own safety, their health, and they're also thinking about how to continue to operate. They're thinking about how to be more productive, but they're also thinking about the future. And so that's really what we've wrapped our leadership team around, our leadership cadence, and our priorities. So as a reminder, as you see on this slide, our business has 4 basic platforms. Our warehouse automation business, otherwise known as Intelligrated, I'm sure we'll talk a bit about that. Our safety solutions portfolio, where we have a very broad set of offerings in personal protective equipment, as well as gas detection and analysis. Our productivity solutions portfolio, which includes mobile and barcode scanning, voice automation technologies, and RFID. And our sensing and Internet of Things business, which has been a really critical component business in this particular time. And as you can see in the bottom of this graph, we've got a very diverse exposure to end markets. And some of those end markets are doing extremely well and growing very quickly, while others are a bit more challenged. But all in all, a very diverse set of markets that we're exposed to. So if you go to the next slide, it really shows, I think, what our priorities have been in the last 6 to 8 months here in 2020. We spend a lot of time thinking about protecting people and the workplace that they're a part of. As part of that, we have rapidly been expanding our capabilities in PP&E. We've added our thermal imaging technology by way of our Rebellion acquisition and have been pivoting both of those into the healthcare space. We've been partnering with our partners at HBT here at Honeywell around healthier buildings and extending that into healthy stadiums, healthier universities, and other settings where our technologies work together. We're delivering productivity outcomes right now for our customers. Some of our customers have never seen more demand in their businesses, and they're working to keep their employees safe and productive. We're helping them deploy new procedures, helping them keep their workforce at a safe distance, and in some cases, helping them operate their facilities remotely. And of course, we're focusing with our customers and partners to talk about the future. And in our portfolio, the future is all about e-commerce and its effect on many different end markets. We're investing in robotics and automation technologies, and our integrated business continues to grow rapidly in delivering these outcomes to our customers. And in some instances, we're delivering complete turnkey solutions and micro-fulfillment. So these are exciting growth vectors that we've been focused on over the last several months, and we're very pleased to turn in sales growth and margin expansion in the second quarter. So with that, I just want to pause and maybe bring Nigel in and see where we want to go with questions.
Yeah, thanks, John. Can you hear me okay? Good. Well, I managed to negotiate the mute button well, so that's a good start. So, John, thanks for that. That was a great way to frame the discussion. So we got about 25 minutes to sort of run through what I think is a business that maybe doesn't quite get the attention it deserves. It's been built, with a lot of acquisitions over the past decade, but we do think there's going to be a disproportionate amount of sales growth and earnings growth. One point we had for SPS was 2Q earnings. We saw extremely strong order growth at both integrated and within your safety PPE business. Maybe just bring us up to speed in terms of State of the Union and transition to what you see as your top priorities over the next 6 to 12 months.
Sure. So great way to frame it, by the way. So we did experience tremendous orders growth, record backlog at the end of second quarter overall and in both of those businesses. Largely that has continued. We're continuing to see strong growth in both of those platforms and portfolios. And where we've also seen some of them come back in other parts of the portfolio, like productivity products and our gas analysis business. So we've really been focused on expanding our capacity, expanding our output in those areas where, as we talked about, we've had records demand that's been put on the business, while we have been pivoting some of our new product investment, new product innovation ideas, toward the pandemic that's among us. New PPE offerings, new technology to help them sense when they're too close together, for example. Really helping our customers get more out of the technology that they have already purchased from us. So that's really what the current State of the Union has been, which is rapidly expanding output, meeting that demand, while we take stock of the markets that are still really challenged in some of our sensing portfolio and our gas business. And so leadership is really focused on remaining disciplined about investments and making sure that those are high return investments, whether they be new product innovations or whether they be high return CapEx investments, and making sure that we get those out into the market on time or up and running on time.
Great, thank you. Obviously, integrated, we've seen a lot of announcements on new warehouse capacity expansions from some of the REITs and obviously Amazon, etc. Is this purely an e-commerce story, or are there some other drivers out there that you're seeing? And I'm thinking here about maybe existing warehouse capacity being automated, for example. And how do we think about this extreme growth right now? Is this a pull forward, or is it somewhat more sustainable?
Yeah, great question. So the way we think about this is that it's a structural change in business commerce, whether that business is flowing ultimately through a consumer or ultimately to a business. It's not a temporary change, it's a structural change. And the global pandemic, we think, has accelerated the transition to this direct fulfillment mode. And it's largely to home right now, because most people in the United States, at least, are still working from home and not working from the office. But we think there's going to be a hybrid work environment for quite some time. And the effects that that's having on this overall network of production, distribution and then fulfillment is having an impact at all levels of that value chain. So people in the manufacturing end are changing the way that they package product. They're changing the way and the options with which they create selection. In some cases, they're creating their own dropship capabilities. If it's in the distribution channel of these various markets, companies are engineering for throughput. They're engineering for more packages, smaller packages, in many cases, but they're certainly engineering for a lot more items. And then on the end of the marketplace, when you could think about fulfillment, it's a lot about the marrying of those higher volumes of items and the delivery of them. Everybody's competing for labor and everybody's competing for volume. So productivity becomes the key. And so we're being asked to deliver more automation with less touches, solutions that require less human intervention. And to meet those needs, we're investing in technologies like robotics and machine vision, RFID, leveraging some of our productivity technologies, voice enablement, and bringing those all together with our customers. And each customer has a slightly unique set of requirements to help them re-engineer their supply chain and their business footprint for the future.
That's a great point. So I guess if I kind of ask the question slightly different way, the orders you're seeing today, are they from customers, traditional customers, but they're ordering more, or are you seeing sort of new customers that weren't necessarily investing a lot in their warehouse capacity and automation that are now
It's both, really. And especially early on in the second quarter, we had a lot of conversations with existing customers, not knowing exactly what was going to be happening and how long the current environment would persist. As that has gone, this environment of the changed commerce economy isn't going away. It's probably here for a very long time and maybe forever. So, that has really brought in a lot of new conversations, a lot of new players to our company, and we really had conversations with people who we didn't know before. That are really thinking differently about their supply chain. We're having conversations with companies who have previously kind of been against or had not yet invested in a direct fulfillment e-commerce engine for their business, and they're realizing that that's really a need now, and so we're having conversations about that topic. But certainly, it's also the long-held relationships that we've had over many years of helping our customers, meet the needs of the growth in their technologies. There are a lot about the future of labor in the industry and how we can work together to innovate around some of those challenges.
I see. Great. And then, we think, and others view this, certainly was the case when Honeywell acquired it. Just bring up the speed in terms of where that's now gone in terms of globalization, and to what extent is the strength you're seeing today more global in nature?
That's a great question. As we've talked about for quite some time, we have been investing to globalize this business. And it really starts with the product set. And then it's next to the supply chain. You really have to be able to locally source and manufacture and create a service chain to support customers that put these solutions in and use them for many, many years. And so that has been underway and is in a pretty advanced state now. We're really primarily focused on 3 markets for that international expansion right now: Europe, China, and India. And those 3 markets are big market opportunities for us. I'd say fairly advanced as it pertains to automation and commerce. India perhaps maybe behind the other 2 in terms of automation as a component of of the overall supply chain setup, but that we think that's going to change. We think that's a big opportunity. So it's growing. We're winning business in those marketplaces. We're deploying projects now in all three of those regions. But as an overall, kind of dollar value percentage of the total, it's still quite small. So we think there's still a lot of runway out there for us to grow internationally.
Obviously, Europe, China, India covers a decent part of the globe. Do you have any near-term targets for, in terms of international mix sales over the next, call it 3 years?
We haven't really set any targets for that at the moment, Nigel. We'd like the international business to be substantial. We think it could be 25 to 30% of the total in the next 3 to 4 years. But largely that depends on, continued execution and making sure that we deliver to customers' needs. Also depends on the denominator, how fast the North America business continues to grow.
Yeah, that would be a good problem to have, though, wouldn't it? What does this mean? So again, there's more to your business than integrity, so I do want to move on a second. But what does this big surge in orders imply for resourcing and capacity requirements? So are we going to see a ramp up in CapEx for integrity?
Well, we are investing now and expanding our manufacturing and assembly capability. We've nearly tripled the business since we bought it. So we've gone through this cycle once, and we know what it takes to expand both the manufacturing output as well as the project management and installation output in the business. And so we're at that again and underway. We don't expect it to be a huge drain on CapEx. It's not a particularly CapEx intensive part of the business at the moment. So we think we've got that well under control, and we've got to continue to put in the extra capacity that we need.
Great. And then switching on to safety PPE, this is another area where you've been investing CapEx to ramp up capacity on the Untitled marks. I think booked $650 million was in 2Q. Number one, just give us an update on the status of the capacity ramps that you've highlighted in your prepared remarks. And then what do the bookings tell us about how this business is going to ramp or likely ramp in the next 12 months?
Sure. So, we have continued to expand capacity, and, we haven't given out specific numbers publicly, but, we are going to be well in excess of 25 times output by the end of the year than when we started the year. And we've opened a number of new facilities around the world in partnerships with the local markets. And, I think as we've also described before, we're trying to do this in a smart way where, we're partnering with customers and some of the distribution companies in these markets to make sure we have, long-standing commitments for that demand as we put in the supply. And, so far that's going quite well. Q3 continues to trend well in that regard, and we think there's still more opportunity out there. Our capacity ramp-ups are going well. In all cases like this where you're opening multiple factories in record time and putting in complex processes with automated machines, our teams are managing through the challenges and frankly doing a terrific job managing a very complex and difficult set of inputs and dynamics. In terms of the long-term kind of nature of this market, we've done some modeling on this. We've done a lot of research. We think that the market for N95s in particular, but health and hygiene in more generally has changed pretty fundamentally, and that we think that there is a long-term durable demand here for what we're doing. We're working with the end users and the end organizations in these markets directly, and we think that this is going to be a good business for us.
So it sounds like you're reasonably confident that the demand is going to persist. Once we, God willing, get a vaccine and move into a post-COVID world. It sounds like you're confident that this doesn't become stranded capacity.
Yeah, that's certainly our expectation. I mean, we think no one has a crystal ball here, Nigel, obviously, but I mean, there's a lot of really good work being done in the vaccine space, and I'm sure you've done research on this as well. But even if the stage 3 trials go well and the vaccines are distributed as planned later this year and early next, it's not going to be a magic bullet that immediately eradicates the COVID-19 virus from the globe. And things like this are now a heightened risk in everyone's mind, and I think that reality is going to live with us for quite some time.
Great, fantastic. And then maybe one more here before we move on to productivity products. Darius and Greg talked about the $250 million of capex investment this year with a 100% IRR or triple digit IRR. To what degree is that being driven by the capex that you're investing in SPS?
Well, what I'd say is that we are getting our fair share of that capex for sure, and we are spending an elevated level of capex for our business and for the PP&E business in particular. And we expect to be largely finished with that investment stream around the end of the year, through the first quarter for sure. So we're satisfied with the opportunities that we've had to invest, and we will continue to be flexible. Obviously, if there are more high return opportunities that we see ahead of us, then we'll capitalize on those and invest again. But we're definitely getting our share of that and putting it to good work.
Great. Okay. Then moving on to productivity products, what I call Scan Mobility, which is I think a business that you ran back in the day, John. That's a business that's kind of waxed and waned. There's been some struggles over the past 3 years for a variety of reasons. Maybe just bring us up to speed in terms of where we are now. Are we beyond the inventory headwinds in the channel? And where are we on the product vitality kind of curve here?
Yeah, so this business has made great strides. I'm quite pleased actually with what the team has been doing to put the business in a good place by launching a lot of new products. We've got revolutionary new scanning technology that now has been outfitted in all of the mobile computing products, a whole host of scanning solutions. We've got there's more than just scanning and mobility in that portfolio. We have world-class printing technologies and products. The voice product set is in that portfolio, as well as RFID, which we think has a lot of potential as well. But kind of back to your question, the business has gone through cycles for sure, and in 2019, which was pretty challenging for the business, we think we've gone through that cycle. We've got channel inventory right where we want it. The team has made a lot of progress at re-engaging our partners, our resellers in industry, winning at the end user, at the coal face of the customer. And we're expecting growth in the second half.
That's great news. That's actually my next question, so thanks for printing that question. And then I think we've always viewed the productivity product scalability portion of SPS as quite distinct to integrated. But it feels like there might be opportunities to bind these businesses more closely together. To what degree?
Yeah, we think so too. I mean, that's kind of how we got into the warehouse automation business, is by having a significant presence in mobile computing and voice automation in the warehouse to begin with. And so we absolutely are putting those two things together with those teams and with customers. There's somewhat different selling motions, somewhat different opportunities, but increasingly as the integrated business becomes a software business through our investments in the Momentum warehouse execution software platform, the opportunities to integrate what we do in the scan are increasingly great. So we're coming up with new selling schemes and partnerships in our channels with our customers, and building the technology set as well to make that a much more natural buying opportunity for our customers.
And then apologize if this sounds like a question from a tech dinosaur, but does 5G open up opportunities within this portfolio?
Absolutely. we're very close to the technology players in 5G, and you should expect to hear more from us about 5G in the months and quarters to come. But absolutely, we think that 5G will be a very transformational technology, both outside outside the warehouse as well as inside the warehouse.
Great. Okay, so switching gears now to margins, and margins, stable margins are been trending low to mid-teens. Obviously, there's been a lot of acquisitions in here, which has been somewhat depressing the margins. But that's obviously an opportunity as well as a challenge, I guess. And maybe just talk about how you view the margin progression over the next couple of years. As you invest for growth, is that going to restrict or put a brake on the degree of operating leverage, or do you think that we've got a reasonably quick return to maybe the mid to high teens?
Well, we certainly think there's an opportunity to return to better margin performance, and our view is that our long-term margin targets are intact, and we're investing in high return capital projects and organic development projects with the expectation that those are going to turn into margin growth as well. So we feel like we've got a good portfolio of products and technologies that deliver high value for customers, and we expect that value to return in the form of both sales and margin growth. So we've got also productivity opportunities in the portfolio. We've shown and talked before about the fragmentation in our supply chain and the opportunity to simplify that. We continue on that journey as a part of the overall supply chain transformation that Torsten Pilz, our Chief Supply Chain Officer, has been leading and has talked about. So we're trying to do both, and I think we've got a good game plan to deliver a better margin performance this year, next year, and beyond.
And do you think the major driver of that improved margin is going to be volume leverage, maybe some mixed benefits, or do you think that there's going to be a material contribution from cost reduction as well?
I expect kind of equal participation from three sources. One is volume leverage, two is mix, and then the third is productivity. And mix comes in the form of both kind of better managing the portfolio we have, and it also comes from some of the investments we're making in some of our new growth opportunities, software, some of our breakthrough initiatives, robotics initiative we've talked about, and we expect those investments to pay off and be higher, accretive to the overall portfolio.
Great. Thanks, John. And then, just to be clear, because I think there is a bit of a perception out there that the PP ramp is going to be diluted to margins over the next, into 2021. Is that correct?
We don't expect it to be diluted to margins.
Okay, great. M&A, I mean, as I mentioned in my preamble, this business has been really driven, put together with largely through acquisitions over the past decade or so. Where are the white spaces right now? Where do you feel that that there are acquisitions to be done in this portfolio, and maybe geographic expansion might be one aspect, but in terms of technologies and white spaces on technology, where do you see those white spaces?
Yeah, good question. So I guess maybe just as a starter, we remain quite interested, very, very active. And we're continuing to do our good work there in M&A. It's, as you know, pretty challenging environment to do deals right now, but nonetheless, we are interested and engaged. The key areas of interest are primarily the near adjacencies to the businesses we have. So areas that I've talked a little bit about already, like robotics and vision technology, material science, supply chain automation, material handling technologies, industrial sensors, workflow automation software. There's a very long list when you think about the things that we do across our portfolio and how broad both the technology set is that we deploy as well as the markets we serve. We have a very long list of interest areas that energize our
those areas feel like they might be somewhat high multiple areas certainly things like think about supply chain software, robotic technologies. To what degree are your ambitions constrained by return on capital math at this point?
Well, I think that there's always a balance, and we're going to be disciplined buyers, and we have certain requirements to that end. But we're also practical buyers, so we understand that there's a price that's set, and there are expectations of sellers, and so at the end of the day, it's just a matter of making those two things meet and deciding whether our expectations for ownership meet the price point that the seller has. But I'd say that we're certainly leaning in, but we're not going to overpay. I mean, that's a discipline that we've had for a long time, and I would expect us to maintain.
Great. And then I know we're getting close to the half hour mark here, but maybe a couple more questions.
Sure.
Again, sticking with M&A, 3M, one of your big competitors in the personal protection space, has closed the last 2 or 3 major deals in this space. A lot of your deals were already, I guess, more than 10 years ago at this point. Are you now happy with the portfolio you have in personal protection, or is there still scope for you to add some more products or geographies here?
Yeah, that's a good question. Actually, we feel like we've got a very complete safety solutions portfolio, both in PP&E and gas analysis. And in fact, when we added Rebellion last December, we feel like that is a key emerging technology, and we happen to pick up the very best technology crew in the marketplace. And we've pivoted that technology, interestingly enough, into thermal body sensing, and have put a product into the market that's the most precise body temperature scanner in the world. So we think we've really got something with our portfolio, and we don't feel like there's huge gaps in the portfolio. Does that mean we won't continue to look at the players that are out there and maybe consider either some additional technology add-ons or maybe even some additional scale acquisitions? No, of course we'll consider it, but we don't feel like we're at a disadvantage. We feel like we've got a very complete setup and a great team.
Great, and I've blown my budget. I've gone over the half hour mark here, but one more, if I can, on cash conversion, just purely because cash conversion has been a topic for investors over the past few months, and understanding that CapEx, you go through a mini CapEx cycle here, but how do we think about SPS cash flow into 2021 and beyond?
Well, as you know, cash is a top priority that Darius drives for the entire leadership team and the entire company. I'm not expecting that to change. So we're going through, as you mentioned, a short cycle here of investment in CapEx, but we maintain the same kind of expectation and target of 100% conversion. So we're continuing to manage our working capital playbook and manage it aggressively for cash flow production. So I wouldn't expect anything unusual from SPS, and so we're trying to do those two seemingly different things at the same time, which is manage the business for cash performance, but remain flexible for high return investment opportunities.
Awesome. Okay, well, I think we'll draw a line there, John. Thank you so much for your time and your great answers to my questions. So with that, let me hand it back to Mark.
Great. Thank you, John and Nigel, for the discussion. And thank you to everyone on the line for joining our Leadership Webcast with John Waldron. We're excited about the opportunities ahead for our Safety and Productivity Solutions business under John's leadership. We hope you will tune in for our next webcast, which we will announce at a later date. We'll now conclude the webcast. Thank you.